Throw your hands up, throw your hands up, throw your hands up, throw your hands up. I wanna be next on them. I wanna be next on them. Me. Let's get crunk. Buy low, buy right, manage right. Let's go on to the next one here. You want to buy low. Focus on hotels you can buy low for below replacement cost. So most hotels cost about 120, 130,000 a key to build. All right. So if you got a 100 key hotel, it'll cost you about 13 million to build. Well, I like to buy below replacement cost. So if I were to rebuild that, I buy my hotels like my Marriott I bought at 75,000 a key. This home too I bought at 97,000 a key. My Staybridge package I think I bought for 60-something thousand a key. Way below replacement cost. So that alone is just one metric of determine if you have a deal. Do you get that? So try to buy below replacement cost. Let's go to the next one, Walt. A strategy to, well, here's an example. It broke it down, but no, this went into the numbers. The market value of these two hotels is 20 to 25 million, which I shared. Purchase price 13.5, capex 900,000. This is going to produce an equity multiple of over 4x. Now, some of you are like, what's a 4x? Well, we're going to 4 times our money. If you put 100,000 in, that means total you got 400,000 back, inclusive of principal. So whenever you do a deal, I don't care what you do, you at least want to double your money. Now, the quicker you can double your money, the better the deal is. Right? Now, I'm not saying because you can double your money in a day or a week, that's a deal you want to do. I'm just talking about over a 5-year period. If you're investing and you're a passive investor and you're completely hands-off, you should be able to double your money and get, you know, a 5 to 8% cash on cash return. That's what you're going to be looking for. And by the way, as I'm teaching about this, starting in the next couple of weeks, every Wednesday, I'm going to come out with a video or go live teaching you guys how to be a great passive investor. And not just real estate, but in other deals, right? So stay tuned for that. Passive University or investing passively. I don't know. What do you like? Passive University or investing passively? Or passive Wednesdays. I don't know. Tell me what you like. Strategy number 2, you can buy right by higher end brands. Passive Wednesday, investing passively, passive university. Okay. Everybody likes those names. All right. I need somebody that really loves one. Higher end brands, buying the right locations. I really like extended stay hotels. I really do. Because they're a combination of hotels, they like apartments to me. If the hotel goes sideways, guess what? I'm just going to rent it as an apartment. I may not make as much money, but I'll be all right. Matter of fact, a perfect example was during the COVID. You know, our hotel volume went down. We weren't selling as many rooms, and I was like, you know what? I ain't worried about it. We're constantly still selling 60 rooms a day. If I just take my other 2 floors offline and convert them to apartments, guess what? I was still going to make a profit, and I think I was going to be about $200,000 a year, 150 to 250,000 a year. So I mean, either way, it just worked out. Hey there, I hope you're enjoying this video. If you want to learn more about real estate investing, check out my free live podcast I do every Thursday at 12 p.m. Eastern. All you have to do is text the word podcast to 206-803-8068. Hope to see you there. Now, if I do a tier 1 or tier 2 city now, I want it to be kind of like a suburb, but there still have to be a lot of economic drivers to push us to that, all right? Home2 Suites is another deal that could be a 4X. If we can get this management group in order, and because right now, it looks like I'm going to be at an 80%. It took me 2 years. But now we're projecting to be at 80% occupancy this year. So now if I'm at 80% occupancy and my ADR is average of 80-something dollars, I just need to control my costs. And that's where I'm going to bring in my management or bring myself, all right? So a great return. All right, let's go on to the next You got to manage right. I'm telling you, your management operator will make you or break you. And when you get into bigger money, people take advantage of you. I just want to be clear about that. I don't even want to lie to you. Even with me doing bigger deals, they do that. But that's the thing. You pay to play. Hey, some of you are into it or not, you want to get on Instagram or you want to go viral, one of the things you got to be consistent, but you got to pay to play. A lot of times, sometimes your stuff can get viral, and we can show you how to go viral organically. I know how to do that. It still takes work, but if you want to push it even further, you want to get $50,000, 50,000 views on a regular, pay for it. And then what happens after you build it up and you start pushing videos, and it's still good content, it will go viral. Hell, I'm gonna tell you a secret now. If you want to go viral, you get you 20, 30 people, and everybody shares your video at the same exact time. Guess what? You go viral. Look, that's $10,000 worth of game, because that's what I paid for that. Right? Give me my money. I take Venmo, Cash App, ACHs, Zelle, whatever you got. Send me my money, man. I'm giving you too much game. I know. Everything is managed right. But once you understand your cost, this is where you go in. But look, I'm going to keep it real with you. So those are the things you don't have to worry about. You come and join one of our class, become a part of Big Deal Maker. I'll break all those things down for you. So look, what that took me 20 years, people are doing in 12 to 18 months. Don't waste around, all right? An example of managing right. Look, I'm just going to tell you now. Well, I'll go over this, but here's managing right. Occupancy, this was the StayBridge versus the comp set. So, yeah, if you managing right, like here, on the StayBridge and the comp set on the left side, the occupancy was similar. But because I pushed my ADR up a little bit, I'm outperforming my comp set. And that's good management. Versus 20, and look how we've grown from 2021. We were below, just shy of the comp set. Our ADR was still a little stronger than the rest of the market. But, that's why, you get good management. They know how to push you. Ray was like, how about a thank you? Okay, I'll take a thank you. Thank yous work for me. I still would like a Zelle, man. Okay, some thumbs ups and hearts and all those different things, all right?